Hello everyone and welcome to another edition of the Money Pros. I'm Oliver Tutt, certified financial planner practitioner, and I'm going to be your host for the next half hour as we talk about all the issues related to your money, how to make it, how to keep it, and hopefully how to help it grow. Let me give you an idea of what we have in store for today's show because we've got a lot to cover. First up, Forbes' list of the richest people in the world is out. How many billionaires are there out there? How many of them are from the United States? Who are they? Are there any changes on the list you want to know about? It's always nice to look at how the other half lives, and I know they have their own financial planning problems that don't happen to be ours, but we'll talk about some of those folks that are on that list in our first segment. We're also joined by our tax pro, CPA, and partner with Porcaro and Associates, none other than Greg Porcaro. We're going to be talking about starting a business. A lot of those people on that list got their money by starting businesses, and it's got to start small before it can get big. So we're going to talk about some of the keys to starting a business and get those hints and tips from Greg. In our third segment, we're going to be talking about something that, candidly, 5 years ago, I didn't even know existed, so I can't imagine I would have thought I was going to be talking about it on a TV show, and that's the subject of Bitcoin. Have you heard of Bitcoin? Do you know what it is? So I did a little research because I keep hearing more and more about it, and I thought I'd relate some of those details to our Money Pros audience. So we're going to talk about that in the third segment. And then finally, we're going to answer a question in the fourth segment that seems to come up from time to time, and that's the meaning of a Latin phrase that is commonly used in estate planning and life insurance that many people seem to be confused over. So stay tuned for that at the end. But first up, let's talk about the Forbes list of billionaires. Now, Forbes has been pulling together the list of the world's richest people for the past 31 years. They've been compiling this list. And one of the disclaimers that I always like to make on this list is these people don't report their net worths to Forbes, okay? It's not like Forbes has access to their tax returns. This is really Forbes doing an analysis of what public information is available on these people's assets. But for many of these people, their wealth is held up in publicly traded stock, and the percentage that they own is easily determinable, so they can get pretty accurate on what the net worth of some of these folks is. So some statistics before we get to the list of what's going on in 2017. So for 2017, there was a 13% jump in the number of worldwide billionaires. The total number of billionaires worldwide, 2,043. So that's a pretty exclusive club. One I wouldn't mind joining, but certainly pretty exclusive. The collective net worth of those 2,000 billionaires rose 18% in 2017 over 2016 to a total of, get this, if you add up all their net worth, the total value is $7.67 trillion. So we're talking about a lot of money tied up between 2,043 people. There are 195 newcomers on the list, and 15 of those newcomers are women, and that's great to see. 78 people fell off the list, and 33% of those people were from China. In terms of country breakdown, the U.S. has the most billionaires at 565, so 25% of the list is U.S. citizens. China, not too far behind with 319. So that's a few of the statistics of the list. But let's get to the people on the list because there's a couple of interesting changes as well as some names that remain the same for 2017 over 2016. So let's put up the list and we'll talk about them quickly, each one. Number 5 is a new name, Mark Zuckerberg. Now, some of you may be familiar with a little-known app called Facebook. I have it on my phone, and I know you can get it on computer too. But this guy has done pretty well for himself. This is his first time in the top 5, courtesy of Facebook, which of course went public several years ago. Number 4 on the list is a name I did not actually know. His name is Amancio Ortega, and he is the owner and head of a clothing company called Zara, which is based in Spain. I believe he's here in the United States as well. But he actually dropped down from number 3 last year, although his wealth is up. It's just not as up as much as some of the tech money that's on this list. And speaking of tech money, coming in at number 3, Jeff Bezos, another website you might be familiar with, Amazon, the ubiquitous online retailer. Who knew you could get this wealthy from selling books? He had the best year of any of the billionaires on the list. His wealth is up. Now, you got to listen to this. His wealth is up in 2017 over 2016. He's an extra $27 billion richer in 1 year just because of the performance of Amazon stock. Number 2 on the list is a perennial number 2, Warren Buffett, the head of Berkshire Hathaway. he is interesting because, of course, a lot of his wealth is represented by a lot of different stock and different companies, and he has done the best on the list since President Trump has been elected to office. Of course, the stock market, both globally and in the U.S., is up significantly since Trump's election, and he has done the best just since the November election, which is a little bit ironic because Warren Buffett has been fairly outspoken about him not being a Trump supporter. So despite his political leanings, he's done pretty well monetarily. And finally, number one on the list, and I can't recall a time where he wasn't number one on the list, Bill Gates, the founder, former chairman, and CEO of Microsoft. His wealth for 2017 over 2016 is up a paltry $11 billion. His total net worth is $86 billion. So as much of an effort as he seems to be making in giving this money away, and Warren Buffett is actually trying to do the same thing, they don't seem to be able to give it away quite fast enough because they continue to remain at the top of that list. So I love reading the list. It's amazing to see the newcomers that come onto it, where the wealth comes from, but the dollars are truly staggering. So if nothing else, use that as inspiration in your own personal financial planning, and we'll remind you again of the list in 2018. All right, up next is our own money pro, tax pro, Greg Porcaro, CPA and partner with Otranda Porcaro & Associates. We're going to talk about starting a business if you want to get rich. Stay with us, there's more to come. Welcome back to the Money Pros. All right, I'm joined now by our tax pro, Greg Porcaro, CPA, and what a great segue, right? We're talking about those billionaires.
It's really impressive, right, when you hear that number and you realize many of them just started a business at some point with some idea. And
yeah, you know, all of those people on the list, I mean, Warren Buffett's sort of a unique example,
right.
But, you know, certainly Bezos with Amazon, Mark Zuckerberg with Facebook, Bill Gates with Microsoft going back really not so long ago. Those were all ideas started in garages, right, by people that dealt with some of the exact same issues we're going to be talking about right now for anybody that out there that is thinking about starting a business. And I know that many people start a business with the dream maybe of becoming wealthy beyond their dreams, but a lot of people just start a business because they believe in something, they want to control their own destiny. You and I both run businesses, own businesses, so it's really an admirable goal and something I think we want to support.
Absolutely.
So, great topic.
Plus it's good for the economy.
Absolutely. We're not going to argue with that. So we have basically some steps we want to break down, and I don't know how significant the order is, but I read into the order you gave me, and the number one thing on your list was consultant advisor, and under that it said CPA. It didn't list anyone else. Would you care to elaborate about who are the professionals that should be on your team?
I was a little biased, obviously, in creating that, because I find that in many cases when I'm working with someone, I'm usually the first person that they'll come and see because they have no idea what to do or where to go from that perspective. And then from there, we would say, well, you need an attorney, because if you're going to do structural changes to, create a company, you need legal guidance. If you have partners, you need legal guidance. Then there's the insurance professionals. You got to make sure you got your risk protected. And then there's the investment advisor, because hopefully we'll be successful, we'll have a need to create a retirement plan and that kind of thing. So it starts from, I'd like to think anyway, from our office, and then it trickles down, and usually we'll be able to align them with the professionals that
Well, and with few exceptions, most people that start a business, they're not financial experts. They're hopefully experts in whatever field they're starting a business in, but every business requires knowledge of finances, and I think the CPA is sort of the pinnacle of that, right? In terms
yes, I mean, at least the starting point of trying to understand why that's important. And you're right, the motivations are all over the place. Some in post 2008, people were doing it because they lost their jobs and they had no alternative. But we do see that drive to be self-sufficient, create a business, become successful. I mean, most wealth is created independently. It's hard for an employee unless you work for a big publicly traded company, you get stock options, like crazy. It's hard to create a lot of wealth working for someone else.
So number 2 on the list is develop a business plan, and we can talk about some of the things you want to address in a business plan, but as part of that, talk to me about the difference between a business plan and a business fantasy, because surely you see sometimes people come to you and they say, here's my plan, and you say, that's not a plan, that's a wish, right? What's the difference, and what makes a good business plan?
Well, I think That's a really good question, because you see business plan products out there, software, and you create this document that's 70, 80 pages that no one reads. I mean, so I think the basic business plan has to identify what you're going to do, product or service, how you're going to market it, that kind of stuff. That's not our expertise. You need other people for that. So it'll be another area where, like there's SBA has programs to help people evaluate marketing and management and that kind of thing. That aside, it's the numbers part. How much is it going to take to get the business off the ground? Almost every situation I've seen, people think it's going to cost a lot less than it always does, and they think they're going to make a lot more money a lot faster than they actually do. And that's where the fantasy to reality comes into play. So what I'll usually be able to do is say, well, if you're going to open, let's say in a restaurant, for example, I've got a lot of experience, a lot of clients. I know what that transition is like from day 1 to year 10 kind of a thing. Let's see, here's what it's really going to do. And many, many times people will look at that and they'll say, no, it's not going to be like that. You know, all due respect to you, I don't think you're right. And, you know, I hear that sometimes. Usually I am, though, I hate to say it. So it's about understanding how much capital, overestimate what it's going to cost to get in, leave a reserve. I can't tell me people want to buy the business, and I say, well, what are you going to do for working capital? How are you going to pay the electric while you're selling, you know, to customers?
You're just going to dip into the register and figure it out, right?
Well, yeah, if the register's got money in it, that's okay, I guess, to a degree. So I make sure they have a plan for a reserve. With, you know, on the left, they're going to use the finance. You know, when we talk about financing, there's various alternatives to raise the capital. You got to make sure you have enough to get open. I mean, they always say that what causes most businesses to fail is a lack of capital, not a lack of effort or a bad idea. It's because you just don't have enough money to bring that product to the market, turn it over enough time so you actually get cash back.
I think another theme right along those lines is it always takes longer than you think it's going to, right? And having that capital to survive that period where it's not going the way maybe you envisioned it initially, just to be able to survive.
And that's why there's a distinction between buying an existing business, which we might talk about at another time, and starting a business from scratch. Because I think if you buy an existing business, in theory, you're going to have customer activity like almost immediately.
Right, it's a completely, and we do want to hopefully talk about that on a later show. But number 3 on our list is considering financing. So when we say financing, what are we talking about here?
So basically, I broke it down into 3 or 4 things. The first one is savings. So if you have the money, it's best to use your own capital to the extent you can. Usually people don't have enough capital, so then we go, the next tier would be family or friends. I know that sounds crazy, but realistically, many times parents will invest in a business, or family members. You can raise capital both in the form of debt or equity.
I'm guessing the billionaires on those lists, many of their family members are also pretty wealthy.
Yeah,
right?
They probably don't have any trouble looking for capital, and most of us don't have that opportunity. So, but it's surprising how many family members will, particularly parents, will help a child get off the ground. And then naturally there's banks, and despite what people might think, banks do loan money. It's much, much more difficult for a startup company to raise capital with a bank.
So the climate for borrowing, if you're buying a business, a whole lot easier. But if you're starting one up, it could be a challenge to get conventional financing.
To find, unless you have a lot of other assets like home equity or other business
What about
assets.
that? What do you say to somebody who says, you know what, I've got $300,000 in equity in my house, I'm going to tap that, or I'm going to load up my credit cards?
I don't like the credit card option, but
how do you talk to people about that?
So that question, that's a good question, because it comes up a lot. And the first thing I ask a person before they're going to leverage their home equity, especially if they got a family with kids and all that, so is your spouse on board with this? Because you definitely, even if they say yes, they're on board, are they really on board? Because once you do that, something goes wrong, well, you got to regroup really quickly, or your house is in jeopardy, which obviously is not causes a problem. So that's not the first place we look to. But many times it's a form of collateral, which is just as bad. As you know, if you do an SBA loan, almost all the time they're going to take a position on your home, regardless of the equity. So it puts that pressure on, and that's a big step, and that's why people don't give enough credit, I think, to the successful people, whether they're in the 1% group or the 10% group, because that upfront risk is significant.
And I think that's a great word, because we talk about this on the show all the time, and we talk about with traditional investments, risk and return are interlinked, but starting a business is the ultimate risk-taking, and that's why the rewards can be potentially so high.
That's right.
Because small business owners are taking such a big risk.
And then there are more creative ways. Like you can do 401k loans if you structure your business correctly. There's self-directed IRA options, which are really complicated and I don't want to get into. And then there's, you can actually sell it, go quasi-public, private investment offerings.
So a lot of financing options. Next question that often comes up, and sometimes this comes up first for a lot of people, is deciding on an entity. Do I need to be an LLC? Do I need to be an S Corp, a C Corp, a sole proprietor? What is a sole proprietor partnership? What do I do with all this?
Yeah, so that little alphabet soup thing. So the simpler the business, the less likely we need structure, meaning a limited liability company or an LLC or a corporation. So if someone's starting a business in their home, let's say a gift basket business, for example, well, you don't really have much in the way of exposure to third-party liability, I would imagine, not being an attorney. And so you would say, look, do you really want to spend the money to form the corporation or an LLC and then have the structural things that go along with it? Corporate structure is much more complicated than a LLC structure, and the LLC can be broken down into two types, one treated like a sole proprietor and one treated like a partnership. And I'd just like to say, if you're going to have partners, that increases the level of complexity. And many people say, well, that's my best friend, we went to high school, that's all great. When the money starts working out and it doesn't go exactly people plan, the partnerships fall apart a lot of times. So I always push them to, this is where the attorney is a critical component, get us partnership agreement up front so you know where everybody stands, how much, who's putting in what the compensation is going to be like. Moving forward without that is a huge leap of faith, which complicates the risk element.
Big part of, we don't have a lot of time left, but big part of the entity decision is the impact it's going to have on your taxes. What are the tax considerations we should have in our head as we move forward with starting a business?
So you basically get your income tax implications. So if you're successful and now you've converted from an employee to a self-employed person, you got to be sure you're paying your taxes as you go, because you may or may not have a traditional paycheck.
It used to be easy when it was being taken out of your, your paycheck, right?
So you want to be sure you're on top of that. Then there's payroll taxes. So if you're going to grow, you need employees. Payroll taxes are complicated, potentially complicated, which is why payroll services become so popular. They eliminate
money I
that.
ever spent.
Yeah, so we have a payroll processing firm as well, and that simplifies that. It's relatively inexpensive, and you don't have to worry about it as long as you have the money. So you got to make sure the money's in the account. It doesn't solve that problem.
They don't pay the payroll tax.
That's
they
right.
Just make sure it happens.
And then there's sales tax. So if you're in a business that sells retail, sales tax accumulates. So again, we used the restaurant before. That can accumulate quickly. Make sure you don't spend that money, because at the end of the month, you got to send the state their share.
And last thing, about 15 seconds, record keeping. Lousy records for a lot of new
We did a separate show on record keeping at one point, if I recall, and this really could be a whole show. Very important, and that's where our CPA can help you design a record keeping system that's appropriate for the type of business that you're going to have.
But for most people, a shoebox is not a record keeping system.
It's not a good.
The better record keeping you have, the more you know about your business, the more successful it can be. It's not just tedious.
It's really more important for that. It's important for tax purposes, but you wouldn't know if you're profitable or not.
Great information, Greg. Gives us all hope that we're going to get on that Forbes list one day. All right, thanks very much.
You're welcome.
All right, up next, we're going to be talking about Bitcoin. Do you know what it is? If not, stay tuned. We're going to fill you in a little bit. There's more to come right here on the Money Pros. Welcome back to the Money Pros. Have you ever heard of something called Bitcoin? I hadn't until a couple of years ago, and I've started to pay a little bit more attention to it, just more because I'm intrigued by it, not so much from its financial planning applications as just from an economic development that I find fascinating. So for those of you that are not familiar with it, and this is a very basic primer, and I'm by no means an expert on it, here are some of the details on what Bitcoin is. So Bitcoin was created in 2009 by actually somebody that remains anonymous to this day, who has an alias of Satoshi Nakamoto, which sounds like an episode of Lost, if you ever watched that TV show. But it was created, and Bitcoin is often referred to as a cryptocurrency. And the reason it's referred to as a cryptocurrency is because it's really all computer and cloud-based. The currency itself, you can't put your hands on it. It's just represented by a computer or an app, and it's kept in something called a digital wallet. And it allows for, and this is the key here, anonymous transactions, because the only identifier to the wallet is a wallet ID number. So unlike traditional banking transactions where your name, your tax identity, everything like that is attached to everything you do, with a Bitcoin transaction, the only thing that's attached is an anonymous wallet. So it's not tied to any bank. Bitcoin is also not tied to any specific country. So the currency that we're all familiar with is representative of a particular country's currency. Bitcoin is not related to any sovereign nation. It can be purchased on a variety of exchanges. In fact, if you Google it online, you can find a variety of different websites that will allow you to purchase Bitcoin. You can also mine Bitcoin by setting up computers to do complex math problems, and the computers that solve the math problems will win, essentially, Bitcoin. So there's a way to generate it outside of just purchasing. It can be transferred among individuals using computers as well as mobile apps, and it's all anonymous. But here's the really fascinating thing that drew my attention to it recently, which is the astonishing rise in the value of Bitcoin. Now you might think, why does it have any value? But why does any currency have any value? Why does the US dollar have value? Only because we all agree that it does. We're not on the gold standard anymore. It's not like you can cash it in for anything of value. It's only because other people think it has value. Well, Bitcoin hit a 3-year high in January of this year at over $1,000 per coin. And the price currently sits, now it hit its high in January of $1,000, it's currently at $2,500 with a total market value of $35 billion. It's had some plunges in the past, as much as 50% in 2011 and 2014. But let me throw up very quickly a chart that shows the price of Bitcoin since 2013. So this is July of 2013. You can see a spike there, and then you can see a correction where the price of Bitcoin moved down pretty dramatically. But you can see over the past 6 months, the value of Bitcoin has risen dramatically. Now, there are a lot of potential explanations for this. Many people feel like with turmoil around the world, a lot of people want to take their net assets and put them into an asset that's not associated with a particular country's economic prospects. So it's a way to delink your value from the value of the company that you reside in. So it's a store of value, but I would highlight that it's a pretty volatile store of value. But if you own any Bitcoin over the past 6 months, I know you've done pretty well. So for those of you that are experts, please forgive my layman's explanation, but for those of you that aren't, hopefully you find it as interesting as I do. All right, up next we're going to be covering a definition on a Latin phrase that's used in estate and life insurance planning. Stay with us, there's more to come. Welcome back to the Money Pros. I want to talk now about a question that comes up fairly often in relationship to estate planning and life insurance. And that's the meaning of a Latin term that you'll often see on beneficiary designation forms. You'll see in wills, trusts, and things of that nature. And the term is per stirpes. So the question is, what does per stirpes mean? Well, per stirpes, again, is a Latin phrase, and it means by branch or by root. So how does that apply to situations with life insurance and estate planning? Well, imagine this scenario. You have 2 sons, and you want to make them both 50% beneficiaries of your estate. Now, each of those sons has 2 children of their own, so you have a total of 4 grandchildren. If you name your 2 sons as 50% beneficiaries in your estate, then they'll each get half when you die. But if one of those sons dies first, all the money will go to the surviving son. However, if you name the beneficiaries as your 2 sons per stirpes, the value of your estate will then go to their heirs. So one son would get 50%, and the deceased son, his kids would each get 25%. So it's an important term to consider, but hopefully that gives you a little information as you consider your estate and life insurance planning. That's it for today's show. Thanks for watching the Money Pros. We'll look forward to seeing you again right here next Sunday here on the Money Pros. Take care, folks.